Depending on who you ask, 2025 was either an incredible year for property or it was the year that made you feel locked out. And here's the truth, both of those things can be true. So today I want to unpack the Perth property market for 2025, but not just the prices. I want to run through the economics, the population, the supply and demand, all the driving forces that have created the market that we're currently in. One thing to understand before we jump in is that there's no perfect data set. You might find when you're looking around at all the data that there's a lot of conflicting information on the internet and being reported by news channels as well. And it's not necessarily a red flag, it's just context. Whether it be PropTrack or RP Data or REWA or Domain or realestate.com, they all have different slices of data over different periods of time and measure it slightly differently. So I'll do my best to try and add some clarity to all of these numbers. Let's start with capital growth. Domain's end of year report reported that houses grew by 9%, which is around $82,000, and units by 12%, which is around $61,000. Now that unit growth matters. It shows that the pressure that we felt, that affordability pressure, didn't slow demand, it just redirected it. Speaking of affordability, lower interest rates through parts of 2025 increased borrowing capacity, and also the 5% scheme that was dropped on the 1st of October, which really should have been dropped on in January 2026, allowed more people to get into the market. The problem is that whilst this borrowing capacity increased and whilst the cost per borrowed dollar reduced slightly, it also created more competition, driving the market further, and affordability started to feel worse because although you could borrow more and more people get into the market, you're actually having to borrow more to purchase something. So this was kind of the great paradox of 2025. With all this upward pressure, we saw the median price rise. And as at November 2025, there were three prices being thrown around. And that was between REWA at $830,000, PropTrack at $930,000, and RP Data, which is now Cotality, quoted at $955,832. Now, which one of them is right? Well, they all are, technically. They're all measuring slightly different data sets over slightly different times. So the main thing that we can agree on looking at all of these is just the direction, and that is that it is heading north, and no matter which one you look at and which data set you look at, we are getting closer and closer to that $1 million mark for a median house price in Perth. And in any hot market, speed tells us a lot. REWA quoted that the average house took around 9 days to sell and the average unit around 8 days to sell. They also noted that in really hot pockets, so areas that were still classed as affordable, especially when you take into account that 5% scheme and the $830,000 cap, some of those areas were moving as quick as 2 days, which is absolutely insane. And I think that's driven by a lot of agents that were perhaps selling things off market and not reporting it properly, or reporting it after the fact. And obviously the odd agent that was selling something as soon as it was listed, rather than giving the campaign space to breathe. I know a lot of agents with more of a control method will spend 14 days, 2 weekends to really give the market a chance to look, see, and feel out the property, whereas other agents are getting deals done super fast. But ultimately, 9 to 8 days on the market is still crazy low, and it's showing that the market is still moving very strong. Key thing to note with the speed of this market is that it didn't allow stock levels to recover. Now, stock as of the 14th of December is sitting at 2,615 properties on the market. Now, in my 15 plus years, and giving away my age a little bit, this is the lowest I've ever seen stock. When I started in the market, there was 18,000 properties for sale, and you sat in a property for 3 months and maybe met like 15 people. But this level of stock is insanely low. Even this time last year, which was still a crazy market, was sitting at 5,400 properties. And if you've been seeing any of my content for a while, you know that I generally quote 11 to 13,000 properties needed in the Perth market for us to be sitting in a neutral market with perhaps 1% growth. So ultimately, this is historically low, and with even more stock likely to come off over the Christmas break. Looking into 2026, unless there's a really big surge of stock that doesn't get soaked up straight away, we're going to see another insane market take off next year. On the rental side, there were 2,000 properties available for rent in December, and last year around the same time there was about 2,200, so not a lot has changed there. The average rental will take around 15 days to lease out as well, which is important to know if you are chasing a rental and trying to get your next property or secure your next home for the new year. Now, one of the undeniable factors making it harder to find a home, whether you be renting or buying, is population growth and immigration. And when you zoom out on this, it gets really, really interesting. And I'm going to use my cheat sheet here because there's a bit of data and a few stats here, and I don't want to stuff them up, right? So looking at the population growth for Australia as a whole, we grew by 1.6% in 2025. Now, this was actually a slight slowdown from our population growth at 1.8% in 2024. Now, it should be noted that these percentages are a lot higher because there was a real drive to increase our population after COVID, because that was obviously a dismal year for growth. But at the same time, this not sudden pressure, but this increased pressure has obviously started to reveal the cracks when it comes to housing affordability and a bunch of other stuff in Australia, right? But when we're looking at the 1.6% increase, that resulted in 423,000 people, or an increase of population by 423,000 people. And that totaled our population at 27.5 million as of March 2025. And I think that's creeping up closer to probably 28 million now. If we're looking at what percentage was natural, so births minus deaths, and what percentage was overseas, natural increase was 107,000, whereas overseas immigration was 316,000. So really a quarter of our growth is natural and 3/4 of it seems to be immigration. If we're looking at WA though, we had the fastest growing state in the country, the most people entering our area with a growth rate of 2.3%. This added 67,500 people, and the population reached approximately 3 mil, or is projected to reach 3 mil by the end of the year. So migration, both overseas and natural, has been probably the biggest driver for the property growth and the market pressures that we felt. Now, with all these new people, we need more houses. And this is where the real story sits in 2025, and that's housing supply. Now, compared to previous years, we've actually had one of the best years for completions that we've had in over 7 years. It wasn't long ago I was saying that we're completing around 14,000 a year. In 2024, we completed around 21,000. And for 2025, we're on track to complete nearly 23 to 24,000. And September actually saw a 33% jump in completions, which was massive. Now, that all sounds really impressive and like we're fixing the problem, but there's a big catch. Even with record building activity, WA still didn't build enough. The Bankwest Curtin Economic Centre revealed that we're still 4,000 properties behind what we needed to hit our targets. Property Council of Australia revealed that nationally we missed our targets in the first quarter by at least 500 properties. Adding our 4.2% growth since March 2023, and that our Perth median price has grown anywhere from the 830 to the 955, reality is that the supply just still isn't keeping up with the demand. And the question off the back of that everyone has is, why aren't they building enough? And the reality is there's 3 big structural blockers. And one is skilled labour. There are simply not enough tradies to keep up with the demand and the amount of work that is out there. The other is land cost. Even when land becomes available, it's still not really affordable for most people. And the other part is phantom approvals. So basically, there's a lot of approvals in the system that are just reapprovals or being renewed that aren't actually heading to completion, which is kind of inflating those figures. And that's why we saw a shift towards apartments and units. As prices rose, buyer behaviour shifted. We saw more people looking at units and townhouses. High density construction gained momentum, and units outperformed houses. This wasn't a lifestyle shift, this was a maths shift. Now let's talk about numbers that you actually feel. And that is household pressure and mortgages. Because I feel like this defines how people are feeling about the property market if they are trying to buy, or really they've already got a property and they're paying their mortgages. Now I'm going to use my cheat sheet here because there's quite a few numbers and I want to get them right for you. Now, the average owner-occupier loan size in Western Australia is $559,000. Contrast to New South Wales at $779,000, and the average monthly repayment at 6.2%, an interest rate of 6.27%, in WA is $3,449, whereas in New South Wales it's $4,808. Now we can see why a lot of eyes are still on WA as an affordable state. The biggest shift is income pressure. So mortgage serviceability is something really important to talk about, and the numbers that are out there when you look it up say that if you're paying more than 30% of your income to your mortgage, you are under mortgage stress. So keep that in mind moving forward. Now in 2020, we were only spending 21% of our income on our mortgage. Fast forward to 2024 via the ANZ report, that was 44.6%, and that was compared to the average at around 50.3%. Now New South Wales is at 61.5, which is like double, the indicated mortgage stress. The other part is that we spend around 35% of our income on rent if you are renting as well. Now, PropTrack had some interesting figures on this because they were quoting that we're only spending 30% of our income, but they were looking at a subsection of the market and saying that if you had a median income and you were buying the average property that you could afford, it was at 30%. But what that revealed was if you have a median income, you can only afford to buy 17% of the stock that's available in WA. So it's not a true reflection of the whole market, in my opinion. It's just highlighting going, well, if you can afford, 30%, you're only available to buy 17% of the market, which I think is an absolutely shocking figure. And when I read that, I was blown away that the average person can only buy 17% of what's available, which is just insane. Looking at Cotality, which is obviously formerly RP Data, for 2025, their stats reflected similar findings. So the average house nationally is 8.9 times your income, and in WA it's 8.1. If we're looking at the percentage of income that you spend on your mortgage, and nationally it's 48.7% according to them, and in WA it's still 44.2%. Now, that's a huge shift in 4 years. From 2020 to double the amount we're spending on our mortgage is just insane. And WA, I don't know, it felt like it was always a place you could have a great family home and the toys, but I feel like that culture is going to already is slowly disappearing, and you're going to see a lot of people under a lot more mortgage stress as we move forward. Now, as a first home buyer, you might be looking at these numbers going, well, how long is it going to take me to save up a deposit to get into a house? Now, I've got some numbers here for you. If you were trying to save a 20% deposit, average person is going to take around 9 years to save a deposit for a house and around 6 years for a unit. Again, depending on which data you look at, CoreLogic had been quoting around 10.8 years and 7.7 years. So again, let's go with the slightly less depressing figure. So 9 and 6 years. So to give you an example of that, if you were buying a property worth $830,000, that would take you around 9.9 years as a single person earning $112,000 a year. And if you were a couple, if your combined earnings were around $160,000, again, it's going to take you around 6 years. Both of these are after tax as well, keep in mind. So this is still extremely difficult. Whilst comparatively better than Sydney, it's still no small feat to save that money. One interesting thing that I haven't seen anyone talk about is the generational wealth shift. KPMG had one interesting statistic, is that Gen X now on average hold more real estate than baby boomers. And although it's marginal, Gen X is now holding on average $1.31 million worth of property, whereas baby boomers are at 1.3. So again, it's kind of 50-50. So I wouldn't call it an overwhelming majority, but it is a shift. And I think this is going to shape how future decisions are made around property. So I think it's definitely something worth watching. So 2025 wasn't just about price growth. It was about population pressure, supply lag, constraints with building, and a change in buyer behavior. If this kind of breakdown helps you see the market more clearly, follow along. Property decisions are big. Clarity beats confidence, and you need honesty, not pressure. My name's Jeremy Shirazi, and I look forward to catching up with you guys soon. Peace. I hope everyone got some helpful information out of that wrap up for 2025. And if you have questions about real estate in general, check this video out over here where I'm calling for questions for 2026 and to hopefully build some great content for you guys moving forward. Have an amazing Christmas and a very happy new year. See you guys.